Today, I'm filtering out all of the lower liquidity and fire charts so that we can focus on what is the heaviest concentrations in the key areas that we really need to watch heading into the monthly close. Good morning, guys. It's Keith Allen, and the first thing I notice on the chart here is this massive block of ask liquidity overhead. It's actually been strengthening on the overnight. Yesterday, I think it was about 85 million. Now it's up to 91.5 and growing here at this level. And this is from about 70. This is like 70 to 71K, 71, just above 71. Excuse me, about 71,250 up to about just above 72K. So obviously, there's a large cluster of shorts there at risk of getting liquidated if we get that short squeeze to the upside. To the downside, we have some plunge protection, about 36.5 million in place between 68.5 and 69 or so. And so that's obviously a key level to watch. Very thin here in relative terms. Yes, there's some liquidity there. I showed it to you before. There's liquidity there, but in relative terms, it's rather thin. So if we were to lose this level, I'm concerned that we could, well, actually, I'm not concerned. I'd be optimistic that I'd have the opportunity to buy down here around this cluster, 58 to 60. And as you can see, that's not massive either. A lot of this bid liquidity has already been floated up into the range. Some of it's been pulled altogether. Maybe some are waiting to see how we go with the monthly close. So let's look at that. Let's go ahead and look at the candle chart and see how this correlates with where the technical levels are in the charts. Remember, we have this spot overhead above 71, and we have this level at 58 to 60, and we have this level at 68 and a half, 69K level, and then we have this 58 to 60K range down here, where those are the largest areas of concentrated bid liquidity. There's very little below it in terms of, in my opinion, sentiment to go this low or to go sub 60 at this stage. Of course, if we do break down below this 68K level, then we are looking at, we should expect to see bid liquidity come into this range and potentially lower. So watching that, everything I'm about to show you, we're going to consider relative to what we see right here at these levels. So let's go to the Octagon I drew yesterday, right? The MMA Battle Royale between bulls and bears. And when I drew this thing on Wednesday night, price hadn't broken through it yet. And this was really just to kind of illustrate the range and mimic, a cage match with the Octagon. But it ultimately did lay out close enough anyways to some technical levels to have some merit here. And as we can see, if I take this down to the 4 hour, we did have a breakout attempt yesterday, and that was followed by a rejection this morning, and now trying to break back above it. What's noteworthy in here, in addition to just the overall weakness that breaking down represents, is that the 21-day moving average was tested 21 moving average. This is on a 4 hour. So that's a level that we're really going to be watching here on the day chart because that 21 has been very, very critical here. Okay. And so first line of defense, we want to see this prior top, a prior all-time high, the 2021 top at 69K, we want to see that hold. It's been a difficult battle to hold that, right? We do not have a validated RS flip at 69K, in my opinion, because every time we've tested it, we failed. Wick after wick, one solid candle, and then wick, breakdown, retest, breakdown, retest, fail, breakdown through the 21-day, breakdown, failed, and then began to climb back up. So maybe this retest right here, which did retest that monthly close level, maybe this retest is our local bottom. We're about to validate that here in the next couple of days, but these levels have to hold. And if they don't, we look to the next level. Weekly close down here at 67 and change. Certainly not enough liquidity in that area at the moment for that to be significant to me. This would be the important one, in my opinion, the monthly close Both of them, of course, happening Sunday. And what I'm really excited about here is the confluence between the 50-day moving average and this monthly close. Okay, this is in terms of technical support, this is a thing of beauty, right? We have this perfect confluence here, and it is also has perfect confluence with what we see in terms of liquidity in the order book. So I really like this level. I'd really like to go to this level, but we've got this pesky plunge protection in our way right now. So we just have to see how things are going to play out. Chair Powell comments coming up in a bit. I'm not really expecting him to deviate from the messaging he's been sending out for weeks, for months, for that matter. However, there's one little footnote, and that is that we have seen some commentary from analysts on TV and also from some Fed officials starting to hint that they feel, some aren't hinting, some are very blunt, as a matter of fact, that they don't feel that 3 rate cuts is really in the cards for this year. Fed Chair Powell, of course, has been telegraphing 3 rate cuts of a quarter point each for a total of 75 basis points before the end of the year. And the world is waiting to see when those are going to start. So I'm not expecting any change from that messaging. However, based on just some of this recent information and some of the recent data and speculation that we're hearing from some people who are supposed to know, take that with a grain of salt. But, that's creating a bit of FUD in the market. Okay, so the market tends to have knee-jerk reactions to these Fed comments, and I expect that to be the same. The market also tends to, predatory killer whales tend to exploit these illiquid zones around these Fed speeches and around monthly closes. So I'm very mindful of that. And I'm looking for opportunities to continue to add to my stack before we break up above this and head into the stratosphere. Of course, we've got the halving coming up in about 3 weeks. So in my opinion, there's always room for a correction. It can happen at every time. Bitcoin has a history of 20 to 40% corrections, even in bull markets, even just before and even just after halvings. But in those bull markets, those seem to be buying opportunities, and price ultimately corrects. If we were to get that correction, and we may have already seen all the dip that we're getting at the moment, right? But if we're to get that correction, here's what it looks like from the top. 20% would get us down to right about that 59K level, right? So right at the lower low. So that's very interesting to me. We've yet to see that 20% dip. We've come close. We've had like 17. We've had, starting out with a 15% dip. Then we got about 17 or 18%. We've not reached quite 20% yet. We may or may not get it. If we do break through this level, 30% brings us down to the 100-day moving average. That's where we've got support of the 50 to 52K range, and of course the deep drop, which we currently see no sentiment for. But that 40% drop gets us into this area of prior consolidation. That's something I've been talking about for weeks and weeks and weeks. That's a dream target. Yes, I'm laddered down to that level, but chances are we're not going to see it. So, just prepared for what's coming, what could potentially develop our way to the upside. We know we've got hundreds of millions of ask liquidity and resistance between here and here. And then at that point, if we can break above the current or new all-time high, I should say, then we go back, we get back into this range and start chopping our way up. And then we have to work our way into this lifetime channel, which really is where price discovery happens, in my opinion. Let's widen out, give you one shot at that so you can see what I'm talking about. That's not there we go. So this is lots of history here. As you can see, look at this. How about an 82% correction? Yeah, that's like forever ago when Bitcoin was double digits. Those are dreams. Forget it. You'll never see it that low again. But as you can see, We do get dips after halvings, certainly. Even right after halving, here's a dip. Even right after this halving, there's a dip. And that's probably a pretty decent one, too. Look, let's just real quickly. This was the high just before the halving, and it dipped 40%. It can happen. Don't kid yourself into thinking that it can't. So just be mindful of that. And we'll see how things square up after we get through this monthly close. And once we break into this level, right, we could chop up this way for forever and never make it into this channel and still be making good money. But once we get into this channel, we really have serious exploratory trading, right? This is where price discovery happens, because we've got no history here and nothing structural to slow us down until we get to the midway point, and that's beyond what most people's expectations are for a high for Bitcoin ever. So let's be reasonable. Let's be realistic. One level at a time. First, let's get through this monthly close. Then let's break above this current all-time high and work our way into this channel. Hope that helps you guys out. Nothing I say or share on these streams should be considered trading advice in any way, shape, or form. Trading is risky. Do your research. Manage your risks so you can stay in the game for the long haul. What my hope and dream is here is that the information that I share with you on these streams simply helps you trade smarter. Big holiday weekend for everybody. Happy Good Friday. Happy Easter. Have a fantastic weekend and trade smarter.